Hi everybody, I hope you're doing well. It's Nick Hyland here, Managing Director at Verta Property Group. So today I'm doing a quick presentation on Parkwood Mill. This is one of our stunning mill conversion products in Huddersfield. So I'm going to give you just a quick informal run through of the project itself, the location, market performance, the developer. I'll give you my insights as well and really help you understand the proposition and what's on offer here at Parkwood Mill. So let's get into it. As you can see in this image here, we've got the project itself made up of 34 apartments. It's this particular block. So as you can see, really green surroundings. It's very much a tranquil location is probably how I would describe it. You're about 10 minutes outside of Huddersfield Centre. We'll speak about the location shortly, but yeah, it's very, very nice indeed. We'll run through some fast facts for those of you that don't want to stay for the full presentation. This basically just runs through the key information that you'll need in order to make a decision basically. So the package that we have is a 7% net contractually guaranteed return for a 5-year period. So effectively the developer will become your tenant, so you don't have to worry about void periods or anything like that. You are going to earn that 7% net every year contractually guaranteed for that 5-year period. There's only a 10% deposit required for this project. Prices starting from £121,000. Very low service charge, larger than average unit sizes. We've got 1 and 2 bedroom apartments available. Free car parking included as well at the moment, and that will be a dedicated space. So it's ideally situated for transport into Manchester and Leeds. 999-year lease. You're looking at a 29.4% growth rate according to Savills to 2029 for the Northwest region as a whole. And actually in 2023, The Guardian reported, based on Halifax Bank data, that Huddersfield was the fastest growing property market in the UK in 2023. So yeah, some really exciting data back in this investment. And as I mentioned earlier, it's a mill conversion of 34 apartments due for completion in Q1 2026. So here you can see the type of finished product that we're expecting after it's furnished, of which we can help with. So as you can see, really high ceilings, lovely neutral tones throughout, very spacious, stunning flooring. And on the left-hand side, you can see the large windows, which I think are a really good feature of this particular project. You see so many developers today building in city centre locations where there's not a huge amount of natural light coming in. So this is a unique product on the market. So in terms of location, I'm not going to read through all this now, but you can have a Google there. You've got the postcode HD34ZQ. You're about 10 minutes from Huddersfield city centre and 25-30 minutes on the train into Manchester. I believe from Huddersfield to Manchester Victoria is 26 minutes. So really, really easy commute there. And then you've got Liverpool Leeds on your doorstep as well. For those of you that don't know, this is Huddersfield here. So as I mentioned, it's kind of like a triangle in between Manchester, Sheffield, Leeds. So that's one of the reasons why it's performing particularly well, because it's so well connected. People are moving out of these cities to get more space, more green, that extra bedroom, and you're getting a lot of the overspill from these key cities, which is why the values are appreciating and the rents are appreciating as well within Huddersfield. Now, I just want to give you a quick understanding of the actual immediate vicinity of the development. So the project is actually just here on the left-hand side. It's this block that's being converted. But as you can see, what I would encourage you to do is have a look on Google Maps and Google Earth and get an understanding of the surrounding of, you know, where your tenants are going to be living, or if you're an owner-occupier, where you might be living yourself. It's very green. It sounds strange, but there's, you know, lots of dog walkers, country paths. A lot of these mills are being converted into luxury apartments. So you're getting a lot of professional tenants going into the area. A lot of developers are seeing this as a great opportunity. But for investors, it's really, it's something different. There's a bit more character. There's a bit more history. You've still got the convenience of getting into town quickly with the parking spaces or public transport. So yeah, there's a lot on offer. This is where the development sits, so just west of the city centre itself of Huddersfield. So you're onto the main New Hay Road here, and then you're into town. It's very, very easily done. Here's another image of the bedroom, or one of the bedrooms, so what you can expect. Again, you can see this is above average standard finish, which is what we really, really want, what Virtue Homes have done before. I'll speak a lot about the developer shortly, but they, we've seen their finished products. We've worked with them on a number of projects, so we really, really trust that the actual end product is going to look like this, particularly after it's furnished with high quality furnishings as well. Now, just to touch on data, then we'll go through some statistics. I'll give my personal insights on the actual investment case shortly, but Huddersfield, it might not be a city where a lot of investors really understand the proposition and what's available. Everyone knows Liverpool, they know Manchester, they know Leeds. So what does Huddersfield offer exactly? So firstly, you are in the midst of the best performing regional locations within the United Kingdom. Okay, so if you look at Savills, for those of you that don't know, Savills is an extremely reputable brand that's been around for hundreds of years. They've got 600 offices worldwide. They are extremely reliable with their market forecasts. So as you can see here on this chart, what they're showing you here is the capital appreciation rates for regions across the UK from 2025 to 2029. So you can see there the Northwest comes in at 29.4%. And you've got Yorkshire and the Humber, which is exactly where this project is located, which is showing 28.2%, which is the second highest in the country. So whichever way you look at it, you're above average appreciation rates when you look across the country, and you're, in terms of the actual regions, the second highest within the country. So really, really strong on a regional level. Now, Kirklees is the borough of which Huddersfield sits in. So if you look at Office for National Statistics data, the borough of Kirklees actually saw an 8.5% rise in house price growth in the 12 months to February 2025, which was above the national average of 5.6%. So not only are the forecasts of the future showing strong appreciation rates, you're actually seeing this right now. So in the last 12 months, give or take, you're seeing that 8.5% increase year on year. So look, if you're getting a 7% net return and you're getting 8, 9, 10% capital appreciation per year on your purchase, you're doing very, very well. And as you can see, putting the guaranteed return aside for a minute, if you look at the average rental rates, you're actually seeing over a 3% growth rate of rental values year on year as well. So this is all the stuff that we look at, the research that our team does in order to identify an opportunity and whether we want to take it on a market and put our brand against it. And we're seeing here strong future forecasts, we're seeing current strong capital appreciation, and we're seeing strong rental rises. So a lot of this is stacking up to do, to make a very strong investment case. And then just lastly, in terms of the data, I did touch on this earlier, but if you look at 2023 and the 12 months to October of that year, Huddersfield saw an 8.7% growth rate, which was the largest in the UK. There's a couple of reasons why, but we saw a lot of people looking for extra space, moving out of Leeds, Manchester, where the ticket prices have risen a bit, and they're going into more green areas and getting that extra space and that more peaceful residence really. And I've popped the sources here, so you've got the Guardian source, you've got the IFA magazine, so you can have a look through, but this is direct data. You can see the sources that we're quoting from are from the Guardian, Halifax, Savills, Office for National Statistics as well. So really reliable sources, and you've got examples there of showing consistent above 8.5% appreciation rates for this specific city. So yeah, really, really confident in the overall proposition in terms of long-term appreciation. And again, here's another internal shot of a bedroom. So you can see the light beaming in. You've got the internal storage there. We'll give you all the specification sheets so you can see exactly what's included. But again, it's just conveying to you the expected finished product and what it's going to look like. So you can imagine once you take handover of the property, you get it furnished by our team, and you've got tenants that are coming to view these properties, they're going to be very, impressed when they walk into these apartments. Now, moving on to a couple of specifics around the financials and the investment side of things. So, rental return, we forecast 775 to 925 per month, depending on the unit type, obviously. But remember, for that first 5-year period, you've got a 7% net return guarantee for 5 years anyway. So you've got 1 and 2 bedroom apartments there. You've got service charges starting from about 936 per annum, but that depends on the unit type because the actual service charge is £1.80 per square foot. So looking at a long let, you're looking at between 6 and 6.3% net return. And in short let, if you look renting on Airbnb, Booking.com, you could look to do a 10% net return based on 75% occupancy rate. And we can offer free management as well for those that didn't want to take the guaranteed return. We'd highly recommend that you do because it's a very unique proposition. It's something we've negotiated with the developer directly. You know, if you look behind the scenes, effectively what we do is we go to developers and say, look, we'll sell your full building for you, but you've got to give us an attractive proposition to give to our investors. So in this case, that is that fixed return, it is that free car parking space, and that is that phenomenal price per square foot and ticket price overall. So if you look at a unit, let's just say apartment 307 in the building, you're going into a two-bedroom property there for £172,950, which in itself is very attractive. So if you look at the 7% net return, that will give you just over £12,000 or £12,100 per year. So if you look at that over a 5-year period, you're guaranteed over £60,000 in rental income. Guaranteed, contractually guaranteed. That's a direct legal agreement with the developer. So that's really attractive in the first instance. So then if you layer on the capital appreciation expected to 2029, looking at the specific region of Huddersfield or Yorkshire at 28.2%, we're saying if that does play out, which Savills are very reliable in their forecasts, you can look at a property value expected in the region of £221,700. So you're locking in just under 50 grand of capital appreciation over that 4 to 5 year period. So when you add up the rental income plus the capital appreciation, you're sitting there on over 100 grand of equity and profit in 5 years from a very, very low ticket price property, which bear in mind, you've only got to put in 10% plus your reservation fee now to lock in this pricing structure with delivery expected in March of 2026. So the risk profile, when you actually look at what's required and the return on cash invested potentially, is exceptionally strong. So, don't write off Huddersfield, guys, and the secondary market city, because you go into Manchester nowadays, you're paying 250, 300 grand for a one bed, you're getting a 4% net return. Manchester has seen phenomenal growth, and I do believe it's one of the best performing markets in the country. However, if you're an investor, you want to be looking at the pools and the pockets where you've still got all that equity to be made, and where you're going to get that nearly double rental return when you look at the net figures. So yeah, that's what we're looking at, and we've seen this time and time again, guys. I've been working on and off for developers, management companies, investment agencies. I've started multiple real estate agencies myself, so I've seen hundreds and hundreds of units and hundreds of millions of property transacted. And what's really, what we see time and time again is the secondary cities that come up and they start to do really, really well. You're just not going to get that appreciation in London and Manchester city centre anymore. So yeah, have a think about it, guys. And hopefully those figures there of that potential £100,000 in equity over that 5-year period is very enticing. And remember, that's based on a guaranteed rental return, and it's based on forecasts from Savills, who are extremely, extremely reputable. So yeah, we're very, very confident in this overall. Kitchen, just gives you a quick understanding there. As I touched on earlier, we'll give you all the specifications of the appliances that are included, i.e. the white goods, etc. So you can really get an understanding of what you're going to be receiving. The developer themselves, Virtue Homes, as I said, we can give you videos, images of their previous projects. You can have a browse on their website. They're a Cheshire-based company. They focus on the northwest region, but they are local experts. They're a husband and wife team, obviously with a wider team as well. Hundreds of units deliver, exceptional product finish, quality. I should have said there, quality over quantity, because it's very much the look and the finish that they go for, and they do have that strong track record as well. So, as a developer, they're a joy to work with, guys. They just from an agency perspective, they're very reliable. They look after and provide great levels of customer service and feedback. So they protect their brand very strongly, and that's why we like working with them. Cool. So I'm just going to give you my take, guys. As I say, I've been doing this a very, very long time now. I know all the projects my developers sell. Most of the developers in the market. I can almost guarantee you the projects that you're weighing this up against, or considering, or researching when you're conducting your due diligence, we probably know of. So here's just a few takes of why I am so confident in Parkwood Mill as a project. Firstly, you've got that locked-in 5-year period of fixed return. So if you combine that, or if you consider your mortgage rates and your what you've got to pay there, it's very predictable. It gives you peace of mind. You just know what you're going to get, so you can be very confident of the profit margins you're going to be making. 7% net, no operational costs. Okay, no service charge, no ground rent, no management fees. 7% net, which is very, very strong. Obviously, you've got a good forecast there for capital appreciation. You've got evidence there of a track record of it being a #1 market in the UK just a couple of years ago. You've got reputable developer, low service charge, no ground rent. Again, this is after that 5-year period. 999-year lease, which a lot of people want to see these days. Short let approved, which is very important, guys, because I can tell you now, a lot of the investor market, when they're buying units and buying apartments, they want to rent it on Airbnb and Booking.com so they can get a higher than average rental return. So as I mentioned earlier, you'd be looking at a 10% net return instead of a 6% net return if you rent it on the short-term let market. So it's not only important for you as the owner now, but remember, when you come to resell your unit, a lot of it you're going could be selling to an investor, so they're going to want to see that short-term let approval because it has to be written into your lease. Okay, so if an investor, when you're reselling, is weighing this project up against another project which hasn't got short-term let legal approval, then this is going to be far more enticing. So you might not rent it on the short-term let market because you're using that guaranteed return, or you want a tenant for 12 months, for example, but having it in your contract is still important for resale value potential in the future. Free car parking space. We've seen a project in Manchester city centre where they're charging 30 grand for a car parking space these days. So we're giving you one for free. Yes, it's Huddersfield, so the land isn't quite as scarce, but you're still saving £7,500 there. A stunning product. Again, this is really important because tenants, they want big spaces. A lot of them are working from home now, so whether it's that extra light that's coming through, if it's that higher ceiling, you've got the character there of the mill conversion itself, it just brings a bit more uniqueness, and it's not a box apartment in a city centre with 400 units in a tower. So yeah, that's always nice. Manchester overspill, or what we would call the ripple effect. So we see it everywhere. You see it in all major cities around the world. Yes, you have your high-performing city centre locations, but then these commuter belt locations or just outside the city centre, they see amazing uplifts as well. You tend to see higher rental yields on those compared to the city centres. So yeah, Huddersfield is doing well because it's getting a lot of overspill from Leeds, from Liverpool, from Manchester. 170k, that in itself is a good proposition for a 2-bed property. So yeah, I mean, look, you're putting in 17 grand plus your reservation fee to lock in the unit. So yeah, a nice 2-bed for 170 grand is very, very strong. I mean, you're not going to get a new build in Liverpool. You're not going to get a new build in Manchester for 1-beds at that price. So yeah, if you want to make your money go a bit further, it's a great proposition. And it's just generally, it's a low-risk profile project, in my opinion. It's near completion. They've already started work on site. It's only a conversion, so there's less construction risk in general. You've only got to put down 10% now. You've got your guaranteed return, and you've got the market forecasts to give you that confidence. So yeah, if I'm speaking to someone on the phone and they're saying, look, why should I go into Huddersfield? What's so enticing about it? Why this project? It's for those reasons there that I've just given you, which is why you should consider Parkwood Mill. Okay, reservation and booking. So if this is of interest, let us know in the first instance, and we can send you the full due diligence material, fact sheet information, furniture pack information, location guides, the brochure, floor plans, images, financial illustrations. We've got it all, guys. So let us know and we'll get that sent over to you if you haven't seen that already. But if you do want to go ahead, what I would suggest you do is speak to myself or speak to your investment consultant, and they can help you choose a unit within a development. Once you've picked out a unit, you pay a £5,000 reservation fee to secure the apartment and take it off the market. You'll sign a reservation agreement and you'll provide your anti-money laundering documents, which are proof of ID and proof of address. Solicitors will be instructed promptly. You'll then go through exchange of contracts, which we aim for within 28 days, and you'll pay a 10% deposit at that stage. Then you don't pay anything else until completion, where you have 90% of the balance due, which will be Q1 2026. And obviously that can be made up of cash or use a mortgage as well. We've already had pre-approvals for mortgages on the development as well, so we could certainly introduce you to mortgage brokers if that would help, and as well as property management, furnishing services, company formation, tax advice, foreign exchange, whatever you need. We are well connected. We've got preferred parties that we work with because we deal with investors all over the globe. And just to wrap things up, we don't charge any fees at Verta Property Group, so our job is just to advise, consult, and offer suggestions and opinions on the type of projects that you can be looking at. We do have access to most of the market. We are impartial, so if this one isn't right for you, I'm sure we can suggest another one. But to summarize it, for an entry-level buy-to-let or for a low-level addition to a portfolio where you don't want to fork out loads of cash, this could be a great opportunity for a lot of people. So yeah, speak to your consultant or speak to me directly. You can email info@vertapropertygroup.co.uk or give us a call on 0203 442 9914. And then just to finish up, guys, if you want to email me directly, it's nick.hyland@vertapropertygroup.co.uk. We are members of the property address, which is a legal requirement for those operating in our industry to make sure we are following the regulations. And we've got plenty of reviews on Trustpilot as well, so you can have a look at hundreds of 5-star reviews and get to know us. But yeah, any questions, just fire them over, guys, and I look forward to speaking to you soon. Cheers.